Joining us now to discuss is Lyn Alden, founder of Lyn Alden Investment Strategy and member of Swan Bitcoin's board of directors. Lyn, great to have you as always. So let's start off with your Bitcoin analysis. We're not getting the bounce like other risk assets. Do you agree with the assessment that people are just not interested in the space?
I think at the current time, until the risk kind of washes out, right? So, for example, during much of this year, there was a rising dollar, very risk-off sentiment, most assets going down. And, in recent weeks, the dollar did take a break. Basically, the market started pricing in a little bit easier forward monetary conditions, started to get inflation coming off. And, I think in a normal environment, you probably would have seen Bitcoin rally pretty substantially, as probably other parts of the crypto space as well. But because of the industry-specific blow-up that happened, that obviously took out a lot of steam from the market. And so I think large capital spooked. I think it's still overall a risk-off environment. In recent days, equities have also been kind of, somewhat rolling over from what may have been another bear market rally. And so I think there's not a ton of optimism to be super bullish over the next, couple months. There's a case made that the bottom's in, but I think this takes time. It just takes overall kind of has to work itself out. And then there's very dedicated kind of, Bitcoin focused people that are obviously still dollar cost averaging in. Many of them are happy to buy in any sort of capitulations or liquidations that occur. And I think overall that has to just keep grinding through until there's more risk on conditions or until there's a tighter supply situation.
Do you see further contagion effects happening because of the fallout from FTX? For instance, there's trouble at Genesis right now. They had FTX as a huge client.
Yeah, we have to keep an eye on Genesis. That's the obvious one that a lot of people are focusing on. There's also a number of other offshore exchanges you want to see if there's any more contagion out there. So I wouldn't be surprised if there's another shoe to drop. I mean, my base case is probably not to have one bigger than what already happened, but it's certainly within the realm of possibility, especially because the Federal Reserve is still tightening policy. There's still general risk-off conditions. We have an inverted yield curve, which is a historical, very reliable sign of a U.S. recession over the next, couple months, all the way up to, a year or more. And so I do think 2023 is still going to be a challenging period for overall, liquidity conditions and economic realities. And so, it could take quite a while to get one of those like really strong rallies back. But, generally the way that Bitcoin works in the past is that after it kind of finds a capitulation bottom, it just takes a long time to kind of grind sideways and find, more and more price discovery.
You mentioned the Federal Reserve, so there is talk that they could be potentially easing off rate hikes. What are your thoughts on that and, potential catalysts for a Santa Claus rally? Any thoughts on that?
Well, so they've been doing a historic number of 75 basis point rate hikes. Basically, it's one of the fastest hiking cycles in history within, like I say, a 1 year period. And what's most likely going to happen, what the market is starting to price is going to happen, and what some comments are starting to suggest from Federal Reserve officials is that they're still going to increase overall rates from here, but they're going to probably start doing so at a slower rate. So they're probably going to shift to 50 point basis hikes, maybe get down to 25. And then once you start to see signs that, for example, the 2-year Treasury yield rolls down below the federal funds rate, that's when you have to start thinking that probably the top's in or nearly so. And so obviously if we do encounter recession, let's say in the second half of next year, you probably would see some degree of Federal Reserve cutting of rates. You might see a resumption of quantitative easing or at least, kind of partial change in tightening plans. So between now and then, there's obviously a lot. And then there's the challenge where historically when the Federal Reserve is cutting rates, that's still generally not great for risk assets, right? Because they're usually cutting rates for bad reasons, right? There's usually economic slowdown, there's usually bad corporate earnings, risk-off environment. And so I still think there are a lot of challenges ahead going forward for Bitcoin in the broad crypto space. But I think that, overall, because Bitcoin still has a substantial network effect, very, very committed buyers, I think it can grind through it, but we do have to watch out for industry-specific capitulations that are still potentially going to happen.
Do you see this trading range happening for the near term, or what levels are you looking at in terms of break either up or down?
So I'm not an active trader. I focus more on longer term outlooks. I've been kind of in a risk off analysis, for about a year now, and really in some ways stretching back further than that into kind of part of 2021. And I this final blow up was not my base case, for example, right? I was worried about ahead of time Luna blowing up and that sending Bitcoin lower, and that all happened. But some of these further contagions were maybe deeper than my base case, and it's always possible that we're going to get another one, right? So I mean, would it shock me to go down to 15,000, 14,000, 13,000? Not really. Even though I also think it's plausible that the base is already in. I think that most value indicators related to Bitcoin, so for example, the price compared to the average cost basis, already suggests what has historically been a very good buying opportunity. So I think when you look out, say 3 years, this is a very strong buying opportunity. But I'm just not very convicted over, say, a 3 or 6 month period.
Well, one of the headwinds you had outlined in your notes was the regulatory lack of clarity out there right now. And you mentioned the SEC and the CFTC and their evolving viewpoints on whether or not Bitcoin, Ethereum, other cryptocurrencies are commodities. And now CFTC Chair Ross Benham has said in the past, BTC and ETH were commodities, but that perspective appears to have evolved. So what are you watching there?
Well, so Bitcoin itself has a pretty clear regulatory situation. It has for years. Between the SEC and the CFTC, the agreement is that is a commodity. It doesn't pass the Howey test. It never raised capital. So there's really no interpretation where Bitcoin is a security. But most other assets in the space, pass the Howey test most likely, and there's a high probability that any given assets is security. So Gensler is on the record as saying that the majority of assets in the space are securities. And as you just mentioned, I mean, the CFTC chair previously would go to bat for Ethereum and say that along with Bitcoin, it was probably a commodity. But at a recent event at Princeton, he kind of walked those comments back. Would really only commit to Bitcoin being a commodity, which means that at least from what he recently said, his views to be more in line with SEC Chair Gensler on that regard. So I do think 2023 presents substantial risk for large portions of the altcoin space. There also was, the recent SEC court case against Library, and so I think that the regulatory situation is tightening somewhat against any sort of token that, for example, raised capital is now trading on an exchange available to U.S. investors that hasn't filed, regulatory documents that are in line with being a security.